Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, June the 23rd. The year's 2023. Let's talk trading. Weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. And a friendly reminder, hopefully this week, this month, this year, and every time you trade, you have your risk management in place so you don't lose any more than you're willing to lose on any one single trade. Brain management, let's not have any fear or regret. Always remember, pain does not come from the market. It comes from your reaction to the market. So in other words, you're doing it to yourself. Money management, depending on how you trade, make sure you take profit before the market takes it back, especially if you're scalping day trading. A quick look at the monthly chart. We're 284 pips above the monthly open. That's the pound. For the week, though, we are about 90 pips below the open right now, 114 off the high and 40 off the low. And as you can see here on the dashboard, all the open gaps have filled. We are below the opening range for the week, and we are above the opening range for the month. For the year, we're 637 pips above the yearly open, right around that psychological 127.25 area right now. In fact, let's see, I was long and I was thinking it might actually hit that, but I popped out with a couple of pips before the market took it back, and it has bounced. That was before I started the video. Inside bar action, we've got a handful on the daily, weekly, and monthly, maybe almost two handfuls. But notice we popped out of that inside bar from Monday. We broke out of the low 3 times this week. That should tell you something. For the range, only 67 pips today, but you can see there's a bunch of pairs. The other pound pairs, or at least a couple of the other pound pairs, are over 200. It looks like, looking across the dashboard here, the yen pairs, there's definitely some activity with the dollar yen being all the way up to 143. I remember seeing it at 141, and then of course earlier it was way down around in the 130s. Okay, the pound right there, 127.25 psychological. So the question is, does it go to 50 or does it go to the 00? It's going to one or the other. You just have to wait and see which one. Range is just large enough for the rats, and the green rats started feasting just a little while ago, and about time for them to maybe move away from the table, because it's almost the red rat's turn. Pivot trading plan, near the pivot was short. We haven't even been close to the pivot. Bambino flex indicator said to short, and that's pretty much what you should have done since the open. The daily pivot at call at 127.70 has not been hit yet. The weekly's been taken out. The monthly's been taken out. Notice the H4s. We've got one above at 27.74 that's been missed, and one below from 36 H4 bars ago at 26.58. Call it 59. You know, hand grenade close, right? In and out of that upper wick zone, you can see here. I'm sorry, in and out of the lower wick zone from the previous day. You can see here we've crisscrossed that 127.25 psychological line, which happens to be the low from yesterday. And you can see 1, 2, 3, 4, 5 failed attempts. No, 6 failed attempts here using the H1 candle. For the range this week, only 154. That's at the 8% level over the last 12 weeks. That's pretty bad. So we had a big range last week, small one this week. Wonder what's going to happen next week. So it looks like we're going to form an inside bar on the weekly which will give us a couple of nice horizontal line breaks to be looking forward to, thinking that at least one of them is going to have to be broken. So we didn't break out of the previous high, we didn't break out of the previous low. That's why we're an inside bar. Though the high minus the close right now, 84, close minus low. No, I'm not, sorry, not 84 is the average. It's 120. Close minus lows at 33. So rat zone, weekly rat zone traders paid off. Weekly buy zone traders, high minus open 25, open minus low 129. Once again, those horizontal lines paid off as well. Well, looking at the price action chart here, you can see once again that daily low is right there on the psychological 25 line, and price is pulling back again. So if you took that short, you got paid off again. And you can see here how many times this trade's happened. I mean, it's almost like clockwork. I mean, look at this range we're stuck in between the double O and the 25. So, you know, maybe look to enter somewhere between double O and 10, and then you know, look to exit somewhere between 20 and 25. You can just play that range. And you can see it even easier here with the M1. It just put in a 3 bars ago. Now it's starting to turn up. Put in the 1 ball. You can see some previous 3-ball resistance and support here. And just, you can just play those bounces. Back to statistics, 480 pips range so far this month. And if we take a look at that as the ATR percentage, it's at 76, ties February for 3rd place for the month so far this year. Okay, indicators and the ATR, 629 for the month of June. Year-to-date range accumulated, we've added over 170 pips of range so far. Not bad. And the close minus open year-to-date percent so far, we're up to 5.15. Return on your money. You know, it's kind of interesting how you can read, you know, traditional trading wisdom, and they always tell you, you know, don't try and time the markets. But I think if you use some statistics, you put your stop losses at the appropriate locations, you can pretty much time the markets. And from the, you know, using the rat zones, just know where those numbers are and just wait for the bounce. And then, you know, couple that with the range, the ATR movement, you can pretty much pinpoint those locations. Maybe not pinpoint, but you can specify a range within, say, 10 or 20 pips. More than enough to get you an area to build a position. See, a lot of times traders will, you know, they'll pick one level to trade from, and that's the level that they use. And then if it goes against them, then they might wind up stopping out, only to see it turn around and go in their direction, and they get a little upset. So that's why you might only put on a quarter position, third position, half position to see if you're right. You can always, stack in to make up the difference, or add on to make up the difference if it's really moving your way. But if it goes against you a few pips, you can always add in the average down. And a lot of people say, oh, don't add the losers. But if it's in a defined area, predefined area, as opposed to an emotional reaction of not wanting to lose, it's a whole different thing. Do you think somebody trading $1 million or more is putting one single trade on at that level, or are they going to try to accumulate in an area? Just something for you to think about. Okay, we're looking at the daily chart here. You can see we made that daily low here. We went up through S1, but we still haven't hit that pivot. We look at the weekly. You can see we're bouncing again, and zoom all the way out to the monthly. We're still above the previous month's high. I don't really see anything here that's screaming out. If you use this particular indicator, it's just a reminder. That's why I called it trade reminder, because some of these things you want to take a look at and just keep them fresh in your head. At least I do, and then that way I don't forget or don't kick myself because I forgot to look at something. So once again, we were at that psychological 25. We see what price is doing. It's coming right back down. So right here, you might consider going long. We've got a new 15-minute candle. You can see we're hitting these S3 areas. Now, it actually could break right here, and we could come down to this 95. It wouldn't surprise me if it does that, puts in a new 3-ball and reverses. So right here, any of these would be a place for an opportunity. There's a 1-ball. Now, one of the things I might look to do here on this M5 is look at the open at 2706. I might look to go long if this next candle turns around and breaks that 2706, because that means the buyers have pushed back these sellers. But we'll just wait and see. We got another 2 minutes or so. New 3-ball. So let's see if it comes down to 95, bounces, or 90 and bounces. We're right at the double low. So right here, in these past 10 minutes or so, there's 20-some pips to be had just by playing that psychological. So here we're getting the bounce. Also, you can see here we're coming above these lows, and so would be bottom scraping if it scrapes up through there. Take a nice long position somewhere around here. And we're just going to have to wait and see what happens. So, fellow traders, that's it for the weekly wrap up. I hope you have a profitable day, week, month, year so far. And I'm going to wish you a fun and safe weekend. And when you come back to trading, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.